Hello, my name is Blinn Bates. I'm an attorney with Woods and Bates, and I want to give you some information today ahead of your appointment about estate tax and estate tax planning. So, when you come in, this is something you're going to likely be discussing with the attorney, but I want to give you some basic information so you know what you're getting into before that discussion happens. So, we talked about in previous videos ownership and beneficiary designations and why that's important. So, how assets are owned, whether they list beneficiaries, jointly owned, transfer on death, things like that are all important for purposes of whether or not the asset is going to have to be probated. But we want to keep this in mind also when we get into estate tax planning. And this is a chart here that you've seen before if you've watched previous videos, but this talks about the gross taxable estate. So the gross taxable estate is what estate tax is assessed upon. And that gross taxable estate is made up of all assets that somebody owns at the time of their death, regardless of how those assets are owned. So if they're non-probate assets or probate assets, those are all going to go into calculating the gross taxable estate. And we talked before about how those things pass depending upon the ownership, but everything goes into the calculation on this gross taxable estate. So a few numbers for you in this area when we talk about estate tax. There's a federal estate tax, and in the great state of Illinois, there is an Illinois estate tax that is separate and apart from the federal. So the federal estate tax gives an individual an exemption of up to $15 million at the time of this video. That's 2026. And if the total gross taxable estate is less than $15 million, the estate is exempt from estate tax, isn't required to file an estate tax return, doesn't pay any tax. Illinois has an exemption amount of $4 million. So Illinois' exemption is much less than the federal exemption. And the Illinois exemption works a little differently than the federal. So federal exemption has what's called portability. So as a married couple, those individuals can use right now up to about 30 million total with the proper tax filings. Illinois does not have that portability. So Illinois is a use it or lose it type exemption, even if you're married. And so there's some specific planning that we have to do in order to avoid this tax and take advantage of the full, in the case of a married couple, full $8 million exemption in the state of Illinois. As you can see on the slide there, the tax gets pretty punitive. Illinois has a 28.5% tax rate. That's regressive, so it kind of goes down as the value of the estate goes up. Federal estate tax rates like 40% if you get into that above 15 million in value. So just as an example here, say the cost of planning is somewhere in the $3,000 to $10,000 range, and we've come up with a plan, and we want to avoid this estate tax. Had we not come up with a plan, just some numbers for you to consider on an Illinois estate tax. On a gross taxable estate of $5 million, the tax on that estate is going to be about $285,000. So it gets pretty steep pretty quickly. When you get over the $4 million, they charge tax on the entire estate. It's not just the amount above the $4 million, it's the whole thing. Once you reach that threshold, they tax you. So as you can see, that married couple example that I gave you, up to $8 million. If one of those individuals has $8 million when they die, that tax is $680,000. So if we do some planning, that same couple with $8 million, we can have zero tax. So we can save all this $285,000 or this $680,000 if we do the right planning. So that's what we want to do. That's what we want to talk to you about. We look forward to seeing you. Hopefully this information is helpful in your discussion so that you have a little bit of a baseline coming in, and we will see you soon. Thank you.